Hello everyone, welcome to today's session. So today we are going to start one most important chapter, like very important chapter in the journey of your audit. That is the reporting part. Chapter number 7, reporting. The reason why I say most important is till that time, till today, whatever you have learned about execution, about audit, planning, everything now is required to be combined in one single report. Whatever you have done with respect to the audit, like testing, planning, risk assessment, identification, audit evidence, everything now has to be summarized, has to be put in a format of a report. And that's where we need to learn what is the audit report, how it is drafted, what are the things in the audit report, different things with respect to different paragraphs, and how we have to report critical things with respect to whether it's an EOM paragraph, whether it's an OM paragraph, whether it's a qualification, key audit matter, a lot of things. So now in chapter number 7, we will learn about these things, how to draft the audit report. Okay. Before I go and do a deep dive in chapter number 7, before we start, any doubt with respect to the previous sessions you guys have? Any doubt? No? Okay. So no doubts. Fine. If you have any doubts at any point in time throughout the session or later on also, you can post it out in the query section in the chat also, and you can ask your doubts freely. So don't worry about asking your doubts. Okay, you can ask your doubts freely. Okay, so now let's start with the chapter number 7, audit reporting part. My question to everyone is, how do you write your audit report? Like when you have to write an audit report, what are the things, how do you, which are the major sections you can remember? Like, okay, this is the section like where I write about, okay, whether true and fair. This is the section where I write about the qualification. So if anyone knows any major sections, which are the major sections in the audit report? Anyone? If you have gone through the audit reports, what are the sections in the audit report? How it is drafted?
Good evening, sir. The title means independent auditor report, addressing to the members of the company, so and so, and auditor opinion. Opinion will be the qualified opinion, adverse opinion, disclaimer of opinion, or modified opinion, as the case may be. The title will be that if it is a adverse opinion, the title will be adverse opinion. Next, the basis of opinion. Basis of adverse opinion paragraph. Then it is the going concern that we studied about in 570 talks about that going concern, that material uncertainty relating to going concern. That paragraph we will insert. Then key audit matters as per 701. Then other information, responsibility for financial statement. Then auditor responsibility. Then other reporting, other matter paragraph, the other information related. Then there is a signature of the auditor, then place of signature and the audit report date.
Yep, absolutely, very good. Anyone else would like to add something more to this? See, we have already seen an example audit report. Okay, so few, in last session we discussed about audit report, various audit report with respect to going concern paragraph that we were discussing. Okay, at that point in time we saw some of the example audit reports. Again, I will take up that example audit report. Okay, I will take up that example audit report and we will start discussing on that. We will go through the audit report which is there and we will see what it is written, why it is written. We will understand that. We will do a reading of the audit report which is out there in the public domain. Okay. and then we will understand about the audit report and its format. Okay. So here it is, audit report that we have already discussed. Again, do not focus on the name of the entity. It's a publicly available data. Okay. So if you see in this audit report, we have already discussed about this in past. The first and foremost thing is nothing but the title itself, which talks about independent auditors report. This is the title, the first part, independent auditors report. Title. So this title is very important. It shows that you are independent. This title shows that you are independent. Okay. So first part is independent auditor report, a title. Then comes the second part, to whom it is addressed. So here the name of company is there, to whom it is addressed. Okay. Usually, basically, it is the part where we specify the members of the company or who has appointed us, or our audit report is addressed to that particular person. Okay, because it's a company, so that's why we are writing to the members who have appointed us. Okay, so addressee. The second part is nothing but the addressee. So you can say then starts the opinion part. This is the opinion that we are giving. Can anyone tell me what is the name of SA 700? Just the name, nothing else.
Forming an opinion and reporting on financial statements.
Absolutely correct. Forming an opinion. So SA 700 specifies like what are the things you should do to form an opinion. One such area in that is how your opinion should look like, what should be the minimum content of the audit report and how audit report should look like. Okay. So the second, and after the addressee, the second part, the third part comes the opinion itself. We start with the opinion, we specify what opinion it is. And there are few things in the opinion that we write. First, we write about the paragraph opinion. Like if it is an unmodified opinion, it can be changed if it is a modified opinion. Qualified, adverse, we have seen. Like if I show you another opinion, this is also opinion, not the modified one. Okay, but let me show you a modified opinion. So if we have a modified opinion, in that particular case, the particular heading which is there, okay, it will be totally changed. It will be totally different. It will show as a modified opinion. Okay, and then accordingly it will become the rest of the things will become accordingly. But here we have an opinion, unmodified opinion. So that's why it is only opinion heading over here. Now, what are the things in the opinion section that we are required to mention? Number one, you have to identify the financial statements which are audited. Identify the financial statement which are audited, and that is the requirement of the standard. Okay. Identify the financial statements that are audited. So here, if you see, what it is saying that we have audited the accompanying standalone financial statements of so and so company, including its joint operation, which comprises the balance sheet as of 2025, statement of profit and loss account, including other comprehensive income, because Ind AS Schedule 3, Division 2, statement of cash flows, statement of changes in equity for the year ended on that date, and notes to standalone financial statement, including a summary of material accounting policies and other explanatory information. So here we have identified the entity, We have identified the financial statements that have been audited. We have identified each statement of the financial statement. The name of entity, it should include the name of entity. It should include the FS that have been audited. It should include each component of FS. It should refer to the notes that you have audited, the notes along with the component of the FS. Refer the notes including the summary of significant accounting policies, and specify the period that is covered by the each financial statement. We are specifying the period. So if I talk about starting, name of the entity, it is given. Second, FS that we are auditing. So standalone financial statement we are auditing. Third, we are talking about each component: balance sheet, P&L, statement cash flow, statement of changes in equity. Okay. So each element. Then specify about the notes. So notes and the summary of material accounting policies. Then specify period. This is as of 31st March 2025, and these are year on that date. So we are specifying period. Okay. So by this way, we are in the first paragraph itself, we are not only giving a detail about which entity and financial statement, but detail about the period, the components, and everything that you have audited till now. What was the thing that you have audited? It gives every detailed information in that. Okay. Now, here the second paragraph then of basis of opinion talks about your opinion, what kind of opinion you are giving. Okay. When you are expressing an unmodified opinion on the financial statement, which is prepared as per the fair presentation framework, you use that particular language. You have to specify that, okay, this was the financial statement and what is your final outcome, final opinion on that. So you specify that in our opinion and best of our information, and according to the explanation given to us, the standalone financial statement give the information required by the Companies Act in the manner so required, give a true and fair view in conformity with the Ind AS prescribed under section 133 with the companies India's rules 2015. Okay. And other accounting principles generally accepted in India. State of affairs of the company as of 31st March, profit, total comprehensive income, cash flows, and changes in equity for the year ended. So here you are saying that this particular financial statement is giving all the required information as per the Companies Act. Okay. Giving all the required information as per the Companies Act. And then on the basis of that, you are saying that this gives a true and fair view. Your opinion with respect to the fair presentation framework and the compliance framework. Okay. So if I highlight this line, gives a true and fair view in conformity with the accounting standards, generally accepted principles in India. Okay, this is nothing but the compliance and the opinion on the fair presentation framework. Okay, but when I talk about gives the required information, this part, it is nothing but it is the compliance framework. You are saying it is unmodified opinion on the financial statement based on the compliance framework. Generally, at times we specify in all material respects, okay, in accordance with this particular part. So that is also a combination of both. Okay, so that is where you specify these things. You specify true and fair view, and you specify give the information required as per the Companies Act. Clear? Any doubt till now? This is your opinion paragraph. Very important paragraph where you specify what opinion you are giving and on what financial statement. Okay. Plus opinion. That is true and fair view. So till the time we were saying true and fair, true and fair, true and fair, this is where we need to write about true and fair. And in this way. Okay. Then comes the basis of opinion. I'll not go to the basis of opinion as of now, but I want to understand from you guys, what do you think is the basis of opinion? What will be the basis of opinion now? I'll not show you the basis of opinion. You tell me, what should be the basis of your opinion? If you are giving an unmodified opinion, on what basis you are giving an unmodified opinion? What is the basis for that?
So in the opinion paragraph, whatever we are giving, whether it is true and fair, whether what is the reason behind we are giving as a basics for that. See, if it is an unmodified opinion, why the unmodified opinion is given? That will be provided in the basis of for opinion paragraph.
Okay. And what should be that? Like if you have to write the basis of opinion, what you will write? What is the thing on which you are, which is on which you are giving an unmodified opinion?
On audit procedures and the evidence obtained.
Audit procedures and the evidence obtained. Okay, very good. What else? On what basis? What is the additional thing or what is the important thing that will drive the opinion? Like, okay, this is the basis on which we are giving our opinion. What we have done such a thing? Like what different we have done here?
We have to state that we have conducted the audit in accordance with the standards on auditing as per the applicable financial reporting framework, and our responsibilities also we have to mention. There is a separate section is there. Our auditor responsibility and our independence about the auditors.
Absolutely correct. Yes. Very good. So, very good, Sanjay. Yes. Very good, Mega. So here we will specify what we were supposed to do in order to issue an opinion. Okay. In order to issue an opinion, you have conducted an audit as per the standards. That is the foremost thing on the basis of which you are giving opinion. The audit that has been conducted as per the SA and the provisions of the Companies Act. If it is a company, then the provisions of the Companies Act. That is the main thing on the basis of which you are saying that, okay, I conducted the audit by following all these standards. I conducted the audit, okay, by following and by complying with the Companies Act's requirement. And on the basis of that, I have got the information that was necessary for the purpose of my audit. I have received the sufficient and appropriate audit evidence to provide a basis for that unmodified opinion. Okay, that is I need to write in the basis of opinion paragraph. If you see the basis of opinion paragraph, it says that we have conducted our audit in accordance with the standards on auditing specified under section 143 subsection 10 of the Companies Act. So we have complied with the standards on auditing. The first thing on the basis of which you are issuing an opinion. Audit conducted as per the standard. Then you specify that you specify your responsibilities. Okay, that there is a section of your responsibilities, because that will give more clarity to the you can say reader and the user of the audit report, that okay, what was the responsibility of the auditor on the basis of which he is saying that he is giving unmodified opinion. Okay, then you have to specify about your independence, that we are independent of the company and in accordance with the code of ethics issued by the ICAI together with the ethical requirement that are relevant to our audit of the standalone financial statement and the provisions and rules and made thereunder, we have fulfilled our ethical responsibilities, okay, in accordance with the code. So first of all, we are saying we are independent. Our title also says, but we are reiterating that we are independent of the company. then we are saying that we have fulfilled our ethical responsibilities in accordance with the requirement of the code of ethics. So we are specifying about the independent status and the code of ethics and the ethical requirement that we have complied. Then we talk about the sufficient and appropriate audit evidence that we have received. That we believe that the audit evidence obtained by us sufficient and appropriate to provide a basis for our audit opinion on the financial statement. So sufficient and appropriate to provide a basis. That is the audit evidence. So our objective everywhere was this only, to obtain sufficient and appropriate audit evidence. This is the basis of opinion now for you. This is the basis of opinion now for you. Clear? Any doubt? So this is the fourth point of your audit, that is the basis of opinion paragraph. What is the fifth one? You will say that key audit matters, we can see. No, fifth is not the key audit matters. There is one more paragraph.
Going concern, material unsettled going concern.
Absolutely correct. Very good. Very good, Megha. Yes. Very good, Sanjay. Going concern. If you see, immediately after the basis of opinion paragraph, you specify going concern. Material uncertainty related to the going concern paragraph. That is your next paragraph. That should be there. Can anyone tell me why we are saying this should come before the key audit matter? Why it should come before the key audit matter?
See, key auditor matter will be applicable for only the limited company, which means the listed companies. But in some of the cases, key auditor matter will not be applicable. So the material uncertainty related to going concern, the thing is that when it is appropriate and is disclosed correctly, and those area only we will bring this matters. But we also say that this going concern in this paragraph is not a modified opinion.
Okay, I'll tell you. Basically, why material uncertainty relating to the going concern paragraph is before any of the other thing is the nature of the particular the matter which is reported in that. See, key audit matter paragraph. When we will understand that these are the matters which were difficult. We understand that. But at the end, the auditor was able to audit and the opinion is not modified in those areas. So auditor identifies those areas as the difficult one, but at the end, everything is fine. Good. Perfectly fine. But when I talk about going concern, material uncertainty relating to the going concern, I am although saying our opinion is not modified, but still I'm highlighting something. It's a kind of a thing where you are saying that, okay, there is a material uncertainty, you should watch out for the future. Okay. But as of now, it's nothing and our opinion is not modified. It is something that later on, it may issue and it may create an impact on the going concern assumption of accounting. Going concern basis of accounting for the entity. So it is of such a critical nature. Okay. And if it is gone, let's say if I say the going concern basis of accounting is not appropriate, think the impact. Just think the impact on the financial statement. Because of that, we have already discussed this part. Because of that, it is such an important paragraph. It is kept before key audit matters. So before key audit matters, you have to specify about the going concern. Clear?
Yes, sir. Clear, sir.
Okay. Now, so I will specify over here.
Sir, if there are no material uncertainty, What will we write?
If there are no material uncertainty, then
No. Relating to the going concern, if there are no issues for that, will we leave it blank or we will
not include? If
don't
it
include?
is there, then only we will include. See, in this particular example also, you have a basis of opinion and directly key audit matters. There is nothing on the part of the material
Yes,
uncertainty.
correct,
Not
correct.
there. Material uncertainty, fifth number. And then comes the sixth number, which is the key audit matters. What is the standard that you follow for the key audit matters? How do you determine by which standard do you determine key audit matters?
701, sir.
Absolutely correct. Yes, 701. So we follow SA 701 to understand the key audit matters. But as of now, we will not jump onto key audit matters SA 701 because we are discussing the format of the audit report, the structure of the audit report as per SA 700. Okay. After key audit matters, like I'll take a key audit matter later on in detail. We will go through the key audit matters. Okay. But after key audit matter, there is the next paragraph which talks about other information. So it's a dual page. So, yeah. Other information. Now here you will not find the other information paragraph. Okay. Reason because okay, here it is information on other financial, other than the financial statement, other information paragraph. But there is one more thing that I want to discuss with respect to other matter paragraph. Okay, that we will also see where and how it comes, the other matter paragraph. But as of now, this is the other information paragraph. Now, what is the other information? Other information paragraph basically is a paragraph which is given as per the SA 720, which is on the other information in the annual return or annual report, which is other than the financial statement and the auditor's report. Okay. So as of now, the next paragraph then becomes your other information paragraph, which is as per SA 720. Then comes the very important. As of now, we will skip this also. I will take you in detail through this paragraph when we will discuss the other information. Okay. SA 720. Then comes the responsibility for the financial statement. Now, here there are two things that we will discuss: management responsibility, and then we will discuss about auditor's responsibility with respect to the financial statement. So, first we start with the management responsibility. Okay, we'll quickly read through this. So, the company board of directors is responsible for the matters stated in section 134(5) of the Act with respect to the preparation of these standalone financial statement that gives the true and fair view of the financial position, financial performance, including comprehensive loss, cash flow, changes in equity of the company in accordance with the generally accepted accounting principles, including Ind AS under section 133 of the Act. Quickly, can anyone tell me what is 134(5)? What is 134(5)? What is 134(5)? What are these matters? Anyone? Not exactly, but Sanjay, it includes that also. 134(5). You have gone through the company sect, yes or no? Very good, Mega. So
Now connected to HoneyBook 4.
So 134(5) basically is the director's responsibility statement, which specifies a lot of things. Director responsibility statement basically specifies that, okay, that whether the accounting standards have been applied while the preparation of the financial statements, then whether they have been applied consistently, whether it gives true and fair view, okay, whether maintenance of adequate accounting records is done or not, annual accounts are prepared on the going concern basis or not. Okay, there are a few points which are given in the director responsibility statement. So that is 134.5 director responsibility statement. So what we are saying is directors are responsible for the matters in director responsibility statement, which are given under 134.5. And with respect to the preparation of these standalone financial statements, that gives a true and fair view. And because it is also a part of 134.5, that the director are required to select such accounting policies and apply them consistently, that okay, that gives true and fair view of the state of the affairs of the company at the end of financial year and the profit and loss of the company for that particular period. That is one of the point of the director responsibility statement. And we are reiterating over here that, okay, preparation of these financial statements that gives a true and fair view, financial performance, including other comprehensive laws, cash flow, changes in equity in the company in accordance with the accounting principles, is the responsibility of the company's board of directors, company's management, basically. So do not confuse this with those charged with governance. We are not talking about those charged with governance. We are talking about management, board of directors. Responsibility of board of directors. Some might say that, okay, sir, why can't we write those charged with governance? Because the presentation and preparation of the financial statement is responsibility of the management. Okay. Then we specify that responsibility includes maintenance of adequate accounting records, safeguarding of assets, preventing and detecting of fraud, okay, other irregularities, selection and application of appropriate accounting policies. So can anyone tell me where we have talked about preventing and detecting frauds? So where we are talking about that it is the responsibility of management for preventing and detecting of fraud before this?
SA 240.
Very good. SA 240, we have already discussed that it is the responsibility of management, not us. We are not the forensic auditors. Management has to prevent and detect the frauds. Then other irregularities. That is nothing but, again, management has to ensure that they comply with the laws and regulations. Okay. Selection and application of appropriate accounting policies, making judgments and estimates that are reasonable and prudent. Somewhere we have discussed about the judgments and estimate made by management. Which was that standard where we read about the judgments and estimates that are made by the management?
540. 540.
Absolutely. So we are reiterating what we have seen till now. Okay. Then implementation and maintenance of adequate internal financial control that were operating effectively for ensuring the accuracy and completeness of the accounting records. Financial controls, where we have seen that. Where you have seen about the financial controls? That it is the responsibility of the management. Somewhere in the start, we agreed with the management, this is your responsibility. Where? Quickly.
210, we have agreed with the management. In 210, we have agreed with the management.
Absolutely correct. Preconditions for the audit. That for the preparation of the financial statement in the accordance with the applicable financial reporting framework, Okay, and management is responsible for such internal controls as management determined is necessary for the preparation of the financial statement that are free from misstatement, material misstatement due to fraud and error. So that was the precondition of audit. Again, we have discussed in SA 210 where management agrees and then only we will proceed with that. So management was from start responsible for these things. We have already agreed with management, which are relevant to the preparation and presentation of the standalone financial statement that gives a true and fair view and are free from material statement whether due to fraud or error. That is what we agreed with the management. Yes or no?
Yes, sir.
I'm not sure you guys can recall that or not, but if not, then see, that is the where we need to link everything. That's why I said in the start that whatever we have done till now, whatever we have, made things and whatever we have, done in the planning, in the execution, we have to put up everything over here. Are you getting the point? So it is not something that we are doing new at this particular stage. Sorry, no, we are not doing something new, but we are doing what we have already done before. We are just summarizing it. So just to show you guys again for a quick revision, this is SA 210. Preconditions of an audit, and we over there discussed with the management, agreed with the management that obtain the agreement of the management that it acknowledge and understands the responsibility for such internal controls as management determined is necessary to enable them the preparation of the financial statement that are free from material misstatement whether due to fraud or error. And the same thing sorry, is here, which are relevant to the preparation and the presentation of the standalone financial statement that gives a true and fair view and are free from material misstatement due to fraud and error. Same, directly, we are repeating what we have agreed with them. Clear?
Yes, sir. Please.
Then one more important area that we were earlier also talking in the last sessions, we are again talking back on that in preparing the standalone financial statement, management and the board of directors are responsible for the assessing the company's ability to continue as a going concern, disclosing as applicable matters related to going concern using the going concern basis of accounting, unless they intend to liquidate. Okay, unless they intend to liquidate, they have to mention this. They have to mention about the company's ability to continue as a going concern. They need to disclose as applicable matters related to the going concern, which is material uncertainty if something is there, and using the going concern basis of accounting, unless it's something else, unless they want to liquidate, they want to cease operation, or there is no other option available with them. But if not, then they have to do this. And straightforward, which standard?
570.
570. We understood that what is management's responsibility, and we are repeating that. Why? Now the question comes is why we are repeating management's responsibility in our report. Why we are repeating the management's responsibility in our report?
Because the management only is prepared the financial statement, everything, and presentation, everything, disclosed everything. They only prepared it. They only assessed everything. So that is the reason we are bringing them into our auditor responsibility.
Yes. But the main reason is that while doing the audit, these are the things you agreed with the management, or management agreed with you, that okay, these are the responsibilities that we take on us, and we are just saying back to the users, the readers, that what we agreed with the management. At every phase of the audit, we are letting them know what we agreed with the management. You know that what you agreed with the management. Management knows that what they agreed, but the reader might not be aware. So that's why whatever we will do in, we have done till now, we summarize that in the form of audit report. That's why I said in the start, it's nothing but a summary of what you have done till now. Planning, execution, evaluation, a lot of things that we will see. Okay. Now, then after this, after the responsibility paragraph, so last we saw key audit matter paragraph and other information paragraph, this one. So sixth was key audit matter, seventh was other information, eighth is the responsibility, which is of management. Then ninth, very important, is the auditor's responsibility. Auditor's responsibility. So first point that we have already discussed in past, that is the auditor's objective to obtain reasonable assurance, which is as per SA 200. If you see SA 200, it's nothing but the overall objective of the audit, to obtain reasonable assurance whether the financial statement are as a whole are free from material misstatement, whether due to fraud or error. Okay, and to issue an audit report that includes our opinion, the overall objectives of the independent auditor. Okay, then you specify about the reasonable assurance over here. Like reasonable assurance is a high level of assurance but not guarantee that audit is conducted in accordance with SA. Okay. Then you talk about material misstatement that can arise from fraud or error, and you specify that okay, they would be considered material if individually or aggregate they could reasonably be expected to influence the economic decision of the user. Okay, so you are specifying about the materiality, you are specifying about the reasonable assurance as per the SA 200. Yes or no? Then
Yes,
then with respect to the rest of the part of the audit report, okay, rest of the part, that is auditor's responsibility, let us go through and understand each area, because here again we are summarizing what we have done or what we have already agreed. So as a part of the audit, in accordance with the SA, we exercise professional judgment and maintain professional skepticism. Where it is written that we have to do this? Where it is written that we have to do this? Anyone? Okay, code of ethics, SQC 1.
yes, sir. It's a
Any
code
other
of
answer? Very good, Ayush. Yes, absolutely.
in the subsequent event, SA 560.
Professional skepticism and professional judgment. Basic SA 200. It says that auditor has to maintain professional skepticism and professional judgment. He needs to exercise professional judgment in planning, performing the audit of financial statement. Auditor shall plan and perform an audit with professional skepticism. Basic SA 200. That is what we have seen, what we are saying over here. SA 200. You can say this is a quick revision for you guys, that from where it is coming. Okay. Identify and assess the risk of material misstatement of a standalone financial statement, whether due to fraud or error, and design and perform audit procedures responsive to those risks, and obtain audit evidence that is sufficient and appropriate to provide the basis for opinion. If you bifurcate this, okay, the first point is talks about identify and assess the risk of material misstatement due to fraud and error. Where it is written, that is the responsibility of auditor. Very good, Sanjay.
Okay, 240.
Very good, Mega. Not 240. You have to do the risk assessment, understand the entity, and identify the risk of material misstatement.
SA 315.
Absolutely, yes. SA 315, where we are identifying and assessing the risk of material misstatement through understanding the entities and environment. And design and perform audit procedures that are responsive to those risks. Where it is written and where we have followed this.
SA 330.
Very good. Yes. Auditor's response to assess risk. And obtain an audit evidence that is sufficient and appropriate to provide the basis for opinion. That is straightforward.
SA 500.
Yep. 500 plus at multiple instances we have seen about this particular requirement, that we are required to obtain sufficient and appropriate audit evidence to provide a basis for our opinion. Okay, it is at the multiple places. And it's also there with respect to SA 200. If you see SA 200, it also specifies the same. Sufficient and appropriate audit evidence and audit risk. So here we also say that to obtain reasonable assurance, the auditor shall obtain sufficient and appropriate audit evidence. Okay, so it's everywhere that we need to obtain sufficient and appropriate audit evidence. I would specify SA 200 as of now. Okay. Then we specify about the risk of not detecting a material misstatement resulting from a fraud is higher than one from error, as a fraud may involve collision and everything. Like, we are highlighting the fraud is difficult to detect compared to a material misstatement due to error. Okay, because of its inherent nature. Again, that is coming from SA 240, where we have already specified, we have learned that, okay, fraud, and when the management does it, it becomes a management override of control. Yes or no? So we discussed management override of control, if you remember. Management override of control under SA 240. Then obtain understanding of internal financial control relevant to audit, design procedures that are appropriate in the circumstances. We are also responsible for opinion whether the company has adequate financial controls with reference to the standalone financial statements in place and operating effectiveness of such controls. Now, this is a specific requirement for the auditor as per section 143(3)(I). If it was not applicable, then at that point in time, we have not mentioned this. Okay. See, if this is applicable, we have to specify as per the requirement of the act. We have to say that we have to check it because this is requirement of the Companies Act. This requirement is flowing from Companies Act. But if there was no requirement, means either we had an exemption, or we were not following, or we were exempted from 143(3)(I) because of such nature, or it was not a company, at that point in time, it would have been this much only. Okay. And internal financial controls, understanding of internal financial controls stem from again SA 315. Clear? Yes or no?
Yes, sir.
Okay. Then evaluate the appropriateness of the accounting policies used and the reasonableness of accounting estimate and related disclosures made by management. So where do you talk about accounting policies?
SC 540, sir.
Accounting policies. Think again. Accounting policies.
134.5.
Not 134.5, but somewhere at one more place we talked about accounting policies. Consistent application of accounting policies.
Yeah, it's a initial audit,
Yes.
initial investment, opening balances.
Yes. Opening balances. Consistent application of the accounting policies, and accounting policies, those are appropriate. Yes or no? So at the time of initial audit engagement opening balances, we also saw that we are not only required to check opening balances but appropriate accounting policies. So you can say SA 510 and reasonableness of accounting estimates SA 540.
That is SC 540, right?
Yeah. Appropriateness of the management use of going concern SA 570. So we are just specifying our responsibilities that till now we have understood. Now, is there a list for which where we have to specify the responsibilities in which order? Yes, the order is already given under SA 700. Sanjay. So that we need to follow with respect to the order. What we are required to disclose.
Sir, and also we need to provide that SCS 600 using the work of the another auditor. That also we need to mention our responsibility.
Yes, it will come. It's there. So this is only just few of the responsibility. If you see here, if I talk about, then apart from that, there are other responsibilities also. For example, materiality. You specify about materiality. SA 320. You specify about communication with dosha with governance and management, about the plan scope, significant audit findings, where it is. SA 260.
260.
Significant deficiencies, 265. Complied with the ethical requirement, again comes from the 260 and 265. Okay. Then it comes about the most significance matters that were of most significance. This is nothing but key audit matters. SA 701. So these are certain things, certain responsibilities that we specify as an auditor's responsibility. Now you will say, sir, why we have not specified SA 600? We should have done. It was our responsibility that if we are using the work of another auditor, we should specify that. But when you talk about using the work of another auditor, tell me, does it reduce your responsibility?
No, sir.
When you use the work of auditor's expert, does it reduce your responsibility?
No, sir.
It does not change your responsibility. Means these responsibilities that we have discussed are going to remain same whether you use another auditor's work or not. But yes, now we specify, we have seen a specific paragraph as per SA 600 that we need to specify. Why it is not here? Because it's a standalone financial statement audit report. If I show you the audit report for the consolidated financial statement, over there you will identify this. So
yes, sir. In the consolidated financial statement, it will be available because we are the audited by the branch and other component is by a different auditor.
yes.
Then the responsibility it will be there. In the standalone financial statement, that SAS will not be there. In the CFS, it will be there.
See, This was the other matter paragraph that we discussed when we were discussing SA 600. So at that point in time, we discussed this other matter paragraph. This is nothing but immediately after your auditor's responsibility. If it is a standalone financial statement, you will not find this paragraph, other matter paragraph, on this particular part because it's a standalone. But here we are reporting on the consolidated financial statement. That's why we are specifying this other matter paragraph. Clear? So this comes after the auditor's responsibility, other matter paragraph. And then let me go back to that particular point again. Just a minute. Yeah. And on the basis of this, then you have the other reporting on the regulatory matters. Now, this is nothing but reporting under section 143.3 or any other reporting which is there under the regulatory requirements. Now, if I show you some additional reporting on the regulatory requirements, we will see one audit report that we have something additional reporting over here. Just give me a minute. Again, do not focus on the name of entity. It's a publicly available data. But just to show you guys how different it is when it comes to some other like companies there, but still other laws and regulations are also applicable. This is for a bank. So how the audit report changes. See, you will find the same. You have the opinion. You have the basis for opinion. You have the key audit matters. They don't have any material uncertainty. Fine. We will not include it. Okay. After key audit matters, you find the other information. You find the management responsibility. But here, everywhere, you will find additional things, right? Provisions of Section 29 of Banking Regulation Act. Okay. For example, if you see opinion paragraph itself, okay, earlier we were only specifying the company set in layers. But here what we are doing, we are specifying companies accounting standard rules, not in layers. We are specifying Banking Regulation Act. Circulars, guidelines accordingly issued. Okay. So here we are talking about, the opinion paragraph is changing a bit based on the laws or regulations which are applicable. Similarly, when we talk about management's responsibility, it changes. That, okay, now there are some additional responsibilities and under some other law or regulation. And accordingly, auditor's responsibility might go and somewhat change. Material, it will remain same. Like, major, it will not go here and there. But something might change based on the new laws or regulations. And see this part I was talking about. Report on other legal and regulatory requirement. The first thing comes is Section 29 of Banking Regulation Act, which you will not find in the normal company. Subsection 3 of Section 30 of Banking Regulation Act. If it is an insurance company, it will be something different over here. So based on law or regulation, you may have some different reporting requirements that are taken care under this particular paragraph. That is a report on other legal and regulatory requirements. For example, reporting under Section 197 of the Act, 35B 2A of the Banking Regulation Act, 197 16 of the Act. Okay, 197 read with Schedule 5 to the Act, if it is they are applicable to the bank specifically. So that is there. So this particular part, regulatory and legal requirement changes based on the law or the regulation which is applicable to that particular company. Clear?
But we will include this paragraph irrespective of the nature.
See, now the question comes is, are we required to include this paragraph every time report on other legal and regulatory requirement? That totally depends upon which entity you are auditing. See what we are reporting over here. Section 143(3) of the Companies Act. What if you are preparing an audit report of a partnership or a LLP? This is related to company. If I say I'm not auditing a company, I am preparing the audit report of a partnership, LLP. Do you think 143(3) will come into the picture?
No.
No.
So in that case, this entire thing from 1A to, if I show you, this everything that we are seeing over here. B, C, D, E, F, G, everything will go. Till here, everything will go. And this is also CARO, Companies Auditors Report 2020. If it is a partnership, if it is a LLP, do you think still it will come? No. Means this entire section will not be there. Yeah, but if that is a partnership or LLC, if there is any other law or regulation applicable under which you are required to do the reporting, that will be applicable.
The SA 250 will be applicable for them.
SA 250 for?
Yeah. I mean that consideration of law and regulations.
See, SA 250 will be applicable, considerations of law and regulations, that we have already discussed. That is your responsibility. These points are additional reporting areas.
Yes, sir. Agreed, sir. Got it. No issue. Just I'm highlighting.
Yeah.
For partnership and others, that SA is 250, still the auditor will consider and will report it accordingly.
Yes. Any doubt till now?
So we will include this paragraph in all entities.
If it is a company, you are required to report.
Okay.
Sir, even that code of no CLAR also will applicable in section 360 with respect to professional accountant in practice. Those cases also we will incorporate if anything is missing and from that side.
See, we have already seen no CLAR with respect to professional account.
Yeah, listed entity and the more than 250 crores turnover, for them it will be applicable.
Yes, but in case of audit, already SA 250 is applicable without any limits.
Yes, sir. True, sir.
Yeah. Okay. Now, we will discuss about section 143, the requirements of the audit. See, we need to understand what is the additional reporting requirement of the auditor. So we will go and we will see section 143. We will discuss section 143 of the Companies Act, and that's very important. Then only we will be able to understand what we are required to report under this other legal and regulatory area. Okay. So, duties of auditor under Companies Act 2013. Usually, when I talk about these duties of auditor, I divide it into three categories. These duties of auditor, for my purpose of understanding and for my purpose of easier reporting also, I divide these duties of reporting in three different categories. Number one, you have duties to report on proprietary matter. Duties to report on the proprietary matter. Second, additional reporting of specific matter. Okay, additional reporting of specific matters. We will understand what is that. What is additional reporting with a specific matter? Okay. And then third is the reporting for the fraud. I'm only talking about reporting. Reporting for the fraud. So these are the three categories under which I personally categorize reporting for the auditor in case of the Companies Act. Okay. So when I talk about first duties to report on proprietary matter, do you know which are these matters I'm talking about under 143? Which are these matters? Anyone? Can anyone tell me what is 143.1? What is 143.1? Anyone? It should be very, very important. See, 143 is a very important area that we need to understand. And 143.1 is the first thing that we have to report upon, or the matters we need to report upon, or we need to check as an auditor at least. No? Okay. No issues. So I'll tell you, we will discuss what is there under 143.1. Yes, very good, Sanjay. Right to access books of account. And we will discuss now section 143. So again, we will go to the basics. Section 143, bare text, nothing simple. What is written in the act itself. I have taken the act itself, nothing else. So the first thing with respect to the 143 comes is that every auditor shall have a right. It is talking about the right to access the books of account. Right of access at all times, the books of accounts of the company and everything. So that which is necessary for the performance of his duties as an auditor, and other matters inquire into the following are the given matters where auditor has to report, auditor has to go and see and check. These are the proprietary matters that auditor need to look in. The duty, the foremost and the first duty of the auditor as per the Companies Act. First is whether loans and advances made by the company on the basis of the security has been properly secured, whether the terms on which they have been made are prejudicial to the interest of the company. So it talks about loans and advances and their terms. That too, whether it is prejudicial to the interest of the company, which is something which is not made in accordance with the the requirement, or you can say it's not made in the benefit of the company, so which is harmful for the company. It's a duty of auditor to report under this. Okay. Second, whether the transaction of the company, so we are now talking about transaction of the company represent merely by book entries, again prejudicial to the interest of the company. So whether these transactions is just a book entry. At the end, we need to focus, we need to talk about whether these are prejudicial to the interest of the company. That's the main part. Prejudicial to the interest of the company. Whether these are structured in a way that it is impacting the company in a negative way. Then whether the company, not being an investment company, okay, assets consisting of shares, debentures, other securities sold at a price less than at which they were purchased. Means you are purchasing, companies purchasing some shares and purposefully selling at a price lower than it was purchased. If it is not an investment company, because investment company or banking company has a role to purchase, buy and sell, buy and sell, buy and sell. But other than those companies, whether they are selling securities at loss. Again, whether loans and advances made by the company have been shown at deposits. Can anyone tell me why we have this point? Why we have a point number D, loans and advances and deposit? What is the difference between both of them? Anyone? Very good, Sanjay. Yes, absolutely correct. What is the difference between loans and advance and deposits? No? Okay. So the first and important point is loans and advance are voluntary. Means you extend a loan or advance if you want to. No one can force you give me a loan. But when it comes to the deposit, deposits are part and conditional to the contracts and agreements. That if you want to obtain a service, you have to give them the deposit. For example, electricity deposit. For example, some deposit with the government authorities. So deposits are kind of a scenario where you have to give them in order to obtain the service. They are part of the business. Deposit demonstrate a requirement in the business. Whereas loans and advances, they are optional. No one will say you that, okay, give me a loan, then only I will do a business with you. For example, you are taking a property on rent. You pay 3 months deposit, 2 months deposit. But do you say that, okay, I'm taking a property on rent and the landlord is saying, give me first loan or advance, then only I'll give you the property? No. So loans and advances are made voluntarily. Deposits are compulsory in nature. So by changing the thing, by changing the nature of the amount given, it shows that company had to give this amount. That is incorrect. So it is a misrepresentation. Number two, the deposits are of such nature that they are either for the long term or for the fixed period. For example, some deposits are till the time you want to continue the service. There is no coming back. And they adjust the deposit in the last payments of those particular, services, last months of the services. Whereas loans and advances, loans are to be taken back. They have terms, they have interest. Deposit do not carry interest. Most of the deposit do not carry interest. So if I show loans and advances as the deposit, it will be utter misrepresentation. So misrepresentation of loan as deposit. If you give a loan, it in under Companies Act also there is a requirement, yes or no, with respect to loan to be given to related parties under section 188. There are some requirements where you can give so much of the loan. But when it comes to deposit, if it is something of a business nature, then it may exclude or get excluded from section 188. So to avoid this kind of misrepresentation, and whether the personal expenses have been charged to the revenue, means booked in the company, personal expenses. And the last one is that if any shares have been allotted for cash, whether the cash has been actually received, and if no cash has been received, whether the position that has been stated in the books of account is correct or not misleading. So you need to check whether cash has been received for shares issued. Why? Reason because all these points, if you see, all these points are something where we are checking whether something wrong is happening with the company. Is someone trying to take a benefit for the company? Yes or no? So here we are checking whether the company is at the loss because someone else is taking a benefit or not. So these are the proprietary matters, and if that is the case, then we have to report about it. Any doubt with 143.1?
Sir, we will inquire these things. If there is any negative, then only we will give the report, right?
Yes. So see, any which ways, if this is the part where you identify anything out of this, it will be a qualification in your audit report. If something is prejudicial to the interest of the company, there are high chances that it will be a fraud. Same way, selling securities at the loss. If it is done at the purposely, then again, okay, it could be a problem for the company.
Sir, what is the meaning for prejudicial to the interest of the company means? Give a few examples, sir.
Against the harm of the company. Harmful for the company.
Okay, sir, got it.
Harmful to someone, basically. If I talk about prejudicial, you can say harmful. Clear? Any doubt?
No, sir. Like prejudicial to the interest of the company means we talk about from the point of view, say, P&L. Like if they are inflating the profit, will it qualify as prejudicial to the interest of the company? Like if in case of income tax we say prejudicial to the revenue, there it is clear cut that there is an understatement of the revenue. But here, in case of a company, what is meant by prejudicial to the interest of the company? Like they are increasing the profit, camouflaging it, or whatever it is. How will we say it is prejudicial to the interest of the company?
See, prejudicial to the interest of the company means at the end, company is at the loss. Means with physical loss, financial loss, reputational loss, okay, loss of goodwill, okay, all these things we are talking about, that will be a prejudicial to the interest of the company or its members. For example, something is done to do a reputational loss to the company so that the share price falls and the members are at the loss. Prejudicial to the interest of the company. For example, if I give you an example with respect to this one only, loans and advances. Now, if I classify a loans or advance as a deposit, it may not impact my P&L. Yes or no? It may not impact my P&L. It is a misrepresentation. But the impact of misrepresentation is such that the person who is the member who holds the share will not be able to understand the transactions of the company. He will be in such a scenario that he will understand, okay, these are the things which are necessary for the company, which are being done, but someone else is enjoying. Because let's say, for example, if I have a money in the company, if I give a loan to someone else and show as a deposit, what will happen is I will not charge interest. Money is not with the company, so company might incur opportunity loss of not utilizing that money. That opportunity loss is also prejudicial to the interest of the company. So if something is prejudicial to the interest of the company, that comes under 143(1).
Thank you, sir.
Any doubt? Any other point? Any doubt? No? No doubts?
No, sir.
Okay.
Clear, sir.
If no doubts, what we do is, till here we'll take a pause, we'll take a break of 10 minutes. Okay, whatever we have discussed now, and then from here we will continue after the break. So we'll continue with the 143.3, the second reporting area, and we will see how we report under the company set in the audit report. Okay, so here in 143.1, if there is negative, then only we will report as a part of our qualification. But now we will talk about 143.3 after this particular break. Okay, so let's take a quick 10-minute break. Ashok ji? Ashok ji? Thank you. Now what we will do is we will go through section 143.3. That is the second type of reporting that I was talking about, of specific matter. Okay. And we have to specify on 143.3 that whether those things are present or not. It's not something like that 143.1 where if you identify something then only you report. No. 143.3 talks about that whatever it is there, whether they have complied or not, you have to report. Those are the specific matters. Okay. So 143.3 talks about that auditor is also required to state the following, irrespective whether or not, in both of the scenarios, if complied, still report, if not complied, still report. First, whether he has sought and obtained all information best of his knowledge and belief were necessary for the purpose of his audit. If not, then the details and the effect of such information on the financial statement. So he is required to comment on the information and explanation. Then whether in his opinion proper books of accounts as required by law have been kept by company. Okay, whether which is appearing from his examination. Okay, proper books and returns, proper adequate returns have been received from the branches. So he needs to specify whether the details have been received from the branches, whether the proper books of accounts are maintained or not. So books and branches with respect to accounts and information. Then whether the reports on account of any branch office, okay, of the company audited under subsection 8 by a person other than the company's auditor has been sent to him, like branch audit. So whether the report has been sent to him and how he has dealt with that particular report. Then whether the company's balance sheet and profit and loss account dealt within the report are in agreement with the books of accounts. So financial statements versus books of accounts. Whether in his opinion financial statement comply with accounting standards. So AS compliance, AS or Ind AS, whatever the scenario may be, that you need to report over here. So whenever, okay, there is one question, what this return means. Okay, now returns means returns which are filed in this particular context. Here you can say that books of accounts and the returns you can say which are filed with the ROC or MCA with of the companies, and wherever, like, this particular information is given, for example, whether proper books and proper returns for the purpose of his audit. Returns, again, here you can say that whatever returns were filed with the ROC, or you can say MCA, or here you can also examine that, okay, interpret that these returns are something, the information that you required and you are receiving from them. Okay, so it can be considered both. So that is the returns means over here. Like, if you are asking the information and what is you are getting in the return, that information, one, that, and second is the returns which are already filed. Then the observations or comments of the auditor on the financial transactions matters which have adverse effect on the functioning of company. So adverse transactions, you can say, kind of, and your comments, whether any director is disqualified under subsection 2 of 164, director disqualification, any qualification, reservation, adverse remark relating to with maintenance of accounts and others matters. So any other qualification, Okay. Whether the company has adequate internal financial control with reference to the financial statement in place and the operating effectiveness of such control. Now, there are exemptions to this. This is not applicable to all. Can anyone tell me to whom this is applicable? And what are the exemptions here? Yeah.
This is not applicable to the private limited company, one-person company, small company, and turnover less than 50 crores.
Yes, absolutely correct. So there are exemptions. It's not applicable to everyone. So 143(3)(I) is not applicable to private company being a one-person company, being a company where the turnover is less than 50 crores as per the last audited financial statement. Okay. And the loans which have been taken from the banks and financial institution or body corporate is less than 25 crores. So OPC plus, or you can say or, not plus, OPC or PVT Ltd, which has turnover and borrowing criteria. Turnover basically talks about like turnover less than 50 crores as per the latest audited financial statement. Borrowings, which is 25 crores. Again, borrowings can be from financial institution, banks, or any body corporate at any point in time. If that is the case, then yes, it will be not applicable. Clear? Any doubt? Okay. So otherwise you need to report on internal financial control with reference to the financial statement. Then such other matters as may be prescribed. Can anyone tell me what are these matters? Such other matters as may be prescribed. Where these are prescribed, where these are mentioned.
Sir, any pending litigation?
Okay. Anyone else? Which are these other matters? Professional judgment. So as per the professional, you are saying the other matters as per the professional judgment, yes or no? What are these other matters? Other matter paragraph? Quickly guys, what are these other matters? Where they are prescribed?
Sir, other matter paragraph EOM, emphasis matter paragraph 706.
So this is not the other matter paragraph. This is the rule 11. Okay, rule 11 of, very important, Companies Audit and Auditors Rules 2014. Okay, Companies Auditor and Auditor Rules 2014. So these rules are there about the audit, and over there is a rule 11, other matters to be included in the audit report.
Sir, this is other than the EOM and other matter paragraph. Other matter paragraph is related to the audit issues, audit reporting. EOM is separately. If it is disclosed, that is different. In addition to the 706, there is other issues. In that line, we will update here these items.
Okay, yeah. So other matter paragraph will be there in the audit report, but this is something else. Other matters to be included in the audit report. Yeah. Now let's understand what are these other matters and what auditor is required to do. So auditor reports shall include their views and comments on the following matters. whether the company has disclosed the impact of pending litigation on its financial position. So pending litigation. Where the company has made provision as required under the law or accounting standard for material foreseeable losses on long-term derivative contracts, including long-term contracts, including derivative contracts. So material foreseeable losses on long-term contracts. Whether there has been delay in transferring the amount to investor education and protection fund. So amount transfer delay in investor education and protection fund. D was omitted because D was with respect to required disclosure for the specified bank notes. Like, remember, there was a, like, in between, there was a scenario where you need to deposit the old notes of rupees 1,000. So that was specified bank notes during November 8, 2016 to 30th November 2016, if they are dealing with that. So that was for a limited time period and that was omitted. That is no longer now applicable. Okay. Then point number E. Point number E is divided into 3 subpoints basically. Now, if I summarize point number E1, 2, 3, it is pretty much easy. Okay, what it says that if you read it will be very much, it will appear like, oh, what complex it is. But it is, trust me, very easy. What it is saying is that here management has to represent. Okay, whether the management has represented it means whether the management has confirmed to you, provided his written representation that no funds have been advanced or loaned, either borrowed, share premium, any other kind of funds by the company, okay, to person entity, including foreign entities, which are known as intermediary. So by the company to intermediary with an understanding that intermediary shall indirectly or directly lend this amount to someone else, which is the ultimate beneficiary. Basically, it is saying that whether, again, written representation from management that no such transaction shall have happened, means company giving funds to intermediary so that intermediary directly or indirectly passing on these funds to beneficiary. Okay, so to ultimate beneficiary. So here management of this company has to provide you a written representation and you are auditor over here. Okay, so that is point number 1. Point number 2, pretty much straightforward, simple, that whether management has represented that no funds have been received by the company, okay, with an understanding, whether in writing or not or otherwise, that they have to lend or invest this to the ultimate beneficiary. Now, just the scenario has changed. That earlier you were the auditor of the company. Now, in this scenario, company, instead of company, what I say is that provider giving funds to intermediary, and now this intermediary is company. is your company where you are auditor. And then you are passing those funds to ultimate beneficiary. So point number 1 was talking about have you given any funds. Point number 2 talking about have you received any funds. First, here we were giving the funds. Now in the point number 2 we are receiving the funds. So now point number 2 is saying that okay, obtain a written representation from the management confirming that it is not a intermediary in this entire transaction. And third talks about based on your audit procedures, okay, have you identified anything wrong in this written representation? So have you identified anything which causes you believe that these representations under 1 and 2 contain material mistake? Simple. So third number point talks about, do you think these representations are wrong based on your audit procedures? Representation 1, that company has not given fund to intermediary to give it to ultimate beneficiary. Point number 2, management has to give a representation that they have not received the fund, they are not intermediary, they are not required to pass on any funds to the ultimate beneficiary. Third, based on your audit procedures, have you identified anything which can say that the representations obtained in 1 and 2 are not appropriate? So that is point number E. Fund transfer. You can say just, fund transfer. Clear? And then point number F, dividend declared paid during the year in compliance with the section 123 of the Companies Act. So it's related to the dividend. And point number G, very important. Okay, it talks about after 1st April whether the accounting software and maintaining books of accounts of the company has a feature of recording audit trail, edit log, and whether it was operated throughout the year for all the transactions. And can you verify that the audit trail has not been tampered with and audit trail has been preserved by the company as per the statutory requirement for the record retention? So it is on the audit trail, very important one. Clear? Any doubt?
No, sir. Clear, sir.
Okay, so this is the specific reporting points of section 143.3. We will go to the audit report quickly to see how 143.3 audit points are given over there. See, these are the specific reporting points. So they are saying we have sought to obtain all the informations and explanation to the best of our knowledge and belief. Like if it is they have obtained, they will specify that. Then, in our opinion, proper books of accounts are required as by law, have been kept by company. So far it appears from our examination of those books. Balance sheet, P&L, comprehensive income, cash flow, equity dealt by this report are in agreement with the books of account. The standalone financial statement comply with the India section 133 of the Act. On the basis of written representation received from the directors, none of the directors are disqualified. With respect to the adequacy of the internal financial controls with reference to the standalone financial statement of the company and the operating effectiveness, report is given in Annexure A. So it is applicable over here. So report given in the Annexure A, we will look into that in some time. And our report expresses an unmodified opinion on the adequacy of the operating effectiveness of the company's internal financial controls. Okay. Then, with respect to other matters to be included in the auditor's report in accordance with the requirements of 197(16) of the Act, In our opinion, to the best of information, remuneration paid by the company to its director is in accordance with the schedule. So this is something beyond of 143.3. It is as per the 197.16. Okay, this is beyond 143.3. Then comes the rule 11 points. Again, company has disclosed the impact of pending litigation in the notes. So if there are pending litigation, then you are required to specify that in your notes. Okay. Company has made provision as required under the applicable law for the material foreseeable losses, if there are any. Then there has been no delay in transferring the amounts for the investor education fund, except for an amount of 2 crore, which was held in abeyance due to pending legal cases. If there is any, you need to specify that. Again, management has represented to the best of the knowledge that no funds and entire story. In the second scenario also, no funds and entire thing. And third, based on the audit procedures performed that have been considered reasonable and appropriate in the circumstances, nothing has come to our notice that has caused to believe that the representation in 1 and 2 contains any material misstatement. And the final one, dividend proposed in the previous year is as per the policy. Okay, there is one more point with respect to edit log. So edit log facility is the same operated throughout the year and it is there. So based on our examination, which included test checks, the company has used accounting software systems for maintaining its books of accounts for the year ended 31st March 2025, which have the feature of recording audit trail log. And rest of the thing, as required by CARO, the opinion is given separately. So this is 143.3 reporting. Any doubts? Any doubts with respect to this?
No, sir. Under what heading it has been reported, sir?
This is reported under report on other legal and regulatory requirements. So if there is a requirement of any legal part, legal regulatory reporting part, it will come under here. Whether it's a Companies Act, whether it's Banking Regulation Act is applicable, for the NBFC RBI Act, everything will come under this.
Okay, sir. Even if that 143 subsection 1 also, if there is an inquiry in deviation, that also will bring into here.
Yes. So now, any doubt with respect to 143.3? Understanding any of the area? See, what is the scenario here is why we are going through the audit report. Okay. The reason, because tomorrow, if there's a question on the reporting part, at that point in time, you should be aware like where it will get impacted. What are the areas where it will get impacted? So you should be aware that, okay, this point is reported over here. This point is reported over here. If there is a transaction which is getting impacted, let's say, for example, pending litigations. Now, everything is fine. There is a pending litigation. The question, if tomorrow comes, okay, where will you report for the pending litigation? Now, in that particular scenario, you should be aware that there is something with respect to pending litigation under 143.3. So, if you see this point, the company has disclosed the impact of pending litigation on its financial position in standalone financial statement. Refer this. So you know that in 143.3 I rule 11 over there, as per the rule 11, the first point is with respect to the pending litigation. As an auditor, I am required to report over here. So as an auditor, I am required to report over there. Clear? That's why it's important to understand which thing is reported where. Any doubt?
No, sir. Clear now, sir. Thank you.
Okay. Okay. Now, the second area that, see, again, when we discussed about the reporting power at that point in time, I discussed about duties to report on proprietary matter. So that was your section 143.1. Duties, additional reporting on matters, on specified matters. It is section 143.3 plus rule 11. Now there are two more things over here. That is report as per 143.3I and CARO 2020. Okay. Reporting as per CARO 2020 and as per 143.3I. So we need to also understand how the report under section 143.3I is drafted, like how the structure is, and then we will proceed for the CARO matters. Okay. So let me show you a report on the 143.3I. That is the internal financial control with reference to the financial reporting. So this is the annexure A, which is the report on the internal financial controls with reference to the financial statement as per the clause I subsection 3 of section 143 of Companies Act. Why? Because if it is applicable to a company, you should be aware how to draft this report. What is required to be reported where. Here in this particular report, if you see, it's on the similar line that we have seen till now. That first you specify what you have audited. Okay, like you have audited the internal financial control with reference to the standalone financial statements of the company, name of the company. You specify the period. Okay, and you specify like at what period for the year ended operating effectiveness for that particular date. So you first specify the internal financial controls. Then you give that, okay, what are the responsibilities of the management board of directors with respect to the financial controls? Like they are required to establish the financial controls and they are required to maintain internal financial controls. It is their duty. And they need to create a control environment, okay, based on the criteria established by the company, okay, based on the essential components of the internal control as stated in the guidance note on the audit of internal financial control over financial reporting issued by the ICAI. Now, a quick question to you guys. Which are the essential components of internal control? Which are the essential components of internal control? Quickly. Essential components of internal control. Come on, guys. We have seen this. We have discussed this before also. Prevention and detection. Okay. Tone at the senior management. Okay. Anyone else? Components of internal control. You are saying that the financial, the internal controls which are there have been established by the company considering the essential components of the internal control. Which are these components? Anyone? This is very, very important. See, we have gone through this particular part earlier also. Okay. So the components, there were 5 components. Remember that we discussed on the internal control. 5 components. I'm also telling you 5 important components that we discussed. No? Fine. Let me tell you those 5 important components of the internal control. So when I talk about 5 important components of the internal control, okay. So remember we talked about something with respect to the control environment. We talked about risk assessment. We talked about control activities, information system, communication and monitoring. Yes or no? So when I talk about this essential components of the control environment, those are internal control. So those are control environment. Second, control activities. Sorry, risk assessment. Control activities. Information, system, and communication. And the last one is monitoring activities. We discussed this in detail when we were discussing SA 315. Okay, at that point in time, we discussed these things in detail, what it means. What are those components and how they are relevant, why we need to look for these components. Okay, so that was something we looked into because these were the very important part. Whenever you go for an internal control, you need to make sure that these components are present. Otherwise, you will not be able to evaluate the internal controls. How you will be able to evaluate the internal controls? If you are not aware what are the components of the internal control. Okay, so that these are the components of internal control, and over there you need to understand whether these components are present or not, and accordingly whether you have evaluated these controls appropriately or not. Okay, so you need to specify that in your report on these components. And then you need to specify the responsibility of design, implementation, maintenance of internal financial control goes to the company, okay, to the management, including safeguarding of assets, prevention, detection of fraud and error, accuracy and completeness of the accounting reports, accounting records and everything. It goes to the company, to the management of the company. Now comes the auditor's responsibility. Very important, we need to read this. Our responsibility to express an opinion on the company's internal financial control with reference to the standalone financial statement of the company based on our audit. We conducted our audit in accordance with the guidance note on IFC FR, that is a guidance note issued by ICAI, okay, and the standards of auditing prescribed under 143(10) of the Act. So when you are doing an audit of IFC, you have to comply with the guidance note, which is being issued by the ICAI. Okay, this is the guiding path for your audit of the internal financial controls. Those standards and guidance note require that we comply with the ethical requirements, plan and perform the audit to obtain reasonable assurance about whether adequate internal financial controls with reference to the standalone financial statement were established and maintained, and if such controls operate effectively in all material respect. Remember, whenever this terms comes, in all material respect, this is nothing but you are checking for the compliance framework. Your opinion here is based on the compliance framework. There are 2 types of frameworks. One is compliance framework and another one is another framework. Which is the framework? Another
fair representation.
Yes, your opinion on the financial statement talks about the fair representation framework, whereas your opinion on the internal control talks about the compliance framework. We are not using the term true and fair. Are we using the term true and fair? So the reason we are not using the term true and fair, because we are reporting as per the compliance framework, not as per the fair presentation framework. Do you ever say that our opinion, our responsibility includes to issue opinion or reasonable assurance that that adequate internal financial control depict true and fair view? No, we do not. Because here our responsibility is with respect to the compliance framework, whether it has been complied or not, in all material respect. Then it's about the audit procedures, like how and what audit procedures are done. Then it comes the meaning of internal controls. Very important, meaning of internal controls, that you need to specify what are the internal controls, inherent limitations of the internal control. I'll not go for the detailed reading. Okay, we like you guys can later on go ahead and do a detailed reading, but we need to understand the structure first. Meaning of internal control, inherent limitation of the internal control, and here then in the last we have the opinion. In IFCR we have in the last the opinion. In our opinion, best of our information and according to the explanation given to us, the company has all material respect. If you see, it talks about material respect and adequate internal financial control with reference to the standalone financial statement and everything on the basis of that, based on the criteria for the internal financial control with reference to the standalone financial statement established by the company, considering the essential components of internal control stated in the guidance note on the audit of ICFR issued by the ICAI. Now tell me this guidance note. What is this guidance note? Now here it is, I'm talking about this guidance note established as per the guidance note. What is this? We have discussed something in SA 315, or when we were talking about chapter number 4. So we call this particular guidance note or whatever components that we have used together, we call them something. Anyone? What are these? What are these guidance? What is guidance note here? Okay, so let's say for example, if company established the internal control based on COSO framework. What is that? What is COSO? COSO, we have seen COCO, we have seen COBIT. Yes or no? We have discussed something on this. What are these? Anyone? These are nothing but the framework. These are the framework of internal controls, including the guidance note. Based on which we or the company has to create the internal control. Each and every framework has some components. In this case, the guidance note has the 5 components of internal control. If you go for COBIT, it will have more components. Okay, so every framework has different kind of components of the internal control that are required to be followed in order to create a control environment, entire control system. So here this guidance note is nothing but the framework. That's why we are saying, based on the criteria for the internal control with reference to the standalone financial statement established by the company. This criteria is established by the company, considering the essential components of this, considering the framework. Chapter number 4. Okay. So that is how the framework is used to create the internal control. Any doubt? Any doubts till now?
No, sir.
Okay.
Clear, sir.
If no doubts, let's take a quick question so that we can understand where and what we have to report, and it will help us to understand the reporting part. Very easy question, nothing difficult. Okay. You are CA Rohan, the statutory auditor of Stellar Projects Limited. So I hope it is visible. Okay. You are the CA Rohan, statutory auditor of Stellar Projects Limited for the financial year ended 31st March 2025. During the course of audit, you have identified the following significant matters. Number 1, the company has granted a large unsecured loan of 5 crores to Orion Enterprise, a partnership firm in which the son of director of Stellar Projects Limited is a partner. The loan is interest-free and has no stipulated repayment schedule. The report of the auditor on the company's Pune branch, which was audited by another chartered accountant, contained a qualification regarding the over valuation of the inventory by 2 crores due to the non-provision of epsilons. The company has not adjusted this in the consolidated financial statement. You observed that the company system for purchase is weak. Purchase order can be raised by the store departments, which also receives and inspects the goods. The same department also processes the supplier invoice for payment, indicating a severe lack of segregation of duties. The company is facing major litigation related to the land dispute. The company's legal counsel has opined that unfavorable outcome is probable and could result in the liability of approximately 15 crores. However, the board report and the financial statement only mention the existence of the dispute without quantifying the potential financial impact. The management of the Stellar Projects Limited argues that these are the internal or operational matters and insists that you should issue a clean audit report without specifically commenting on these points. As a statutory auditor, explain your reporting responsibilities over here. So I'll just zoom out so that you guys can read the question in detail again. I think this is good to read. Okay. So take a minute, read the question, and then tell me what is the reporting requirement under Companies Act. Take a minute, read the question, and then tell me the reporting requirement. Point by point, we will discuss the reporting requirement over here. Okay, so tell me, for the first one, what is the reporting requirement? For the first one, what is the reporting requirement? Quickly, for the first one, what is the reporting requirement?
Sir, first one is talk about that section 143(1), under which whether the loan and advances made to the company on the basis of security. I think it's not applicable.
Where this is required to be reported?
It will not come there, sir. 143(1), it will not come.
Okay. Anyone else with something different or some different answer? For first one, we are only discussing now for the first one. We are only now discussing the first one. Come on, guys. The company has granted a large unsecured loan of 5 crores to Orion Enterprise, a partnership firm in which the son of a director of Stellar Projects Limited is a partner. The loan is interest-free, has no stipulated repayment schedule.
Sir, it will come under the form but of the internal control on the financial statement that the framework, the loan is interest-free and has no stipulated repayment schedule. The control is missing.
Okay. So let's go to the section 143 again. That's why I said reporting becomes important if you understand where to report what. The first point of 143(1), whether the loans and advances made by the company are prejudicial to the interest of the company or its members. So loans and advances are prejudicial to the interest of the company. If you see the question, it talks about unsecured loan of 5 crores. Plus it talks about interest-free, no stipulated repayment schedule. This is prejudicial to the interest of the company. And we will see something on this in the CARO also. But as of now, this is the prejudicial to the interest of the company. It should be there as per the 143(1). It should be your point of qualification that this falls as per the 143(1). The company has not given the loans and advances in a proper way. So you have to comment on the prejudicial nature of this loan. So, prejudicial nature of this loan. Simple.
Sir, actually, what is the ask of the question in the below 1, 2, 3, 4? After 4, what is the question? Exact question, sir. Actually, what they asked.
So you need to comment as per section 143 where you are required to report 143(3) or 143(1), where you are required to report.
Okay, actually, I confused with that. I read somewhere in the on the financial statement on the bottom of the line. Okay. Okay, sir.
So as per company act, where you have to report this particular point that you need to tell. Second, okay, let's go to the second one, the report of auditor of the company's Pune branch, where you will report.
Sir, this one we will report under 143.3. We have separately is there. Whether that branch is properly audited and accounts are verified, everything is there. There is one section is there.
Okay. Anyone else? Where you will report this one? Second number. Second number, where you will report? 143.3. Which point? But where? So we saw 143.3C. Okay, if I go back to the report, if I go back to the section itself, we saw 143.3C, whether the report on the accounts of any branch office of the company audited under section 8 by a person other than the company's auditor has been sent to him under the provision to the subsection and the manner in which he has been dealt. And second one, whether in his opinion proper books of accounts as required by the law have been kept by the company so far appears from his examination of those books, proper returns adequate for the purpose of his audit have been received from the branch not visited by him. So whether these things have been kept as per the books of accounts or not. Second, whether the report has been received by the from the branch officer of the company, which is not audited by the company's auditor but audited by someone else. Now, over here, we need to specify in the point number D that the company's balance sheet, profit and loss account are dealt in the report are in agreement with the books of accounts and the returns. Now, this returns again, information that you are receiving back. If I go back to my question, so the report of auditor of the company's Pune branch, which was audited by another chartered accountant, contained a qualification regarding the overvaluation of the inventory by 2 crores due to the non-provision of the obsolescence. The company has not adjusted this in the consolidated financial statement. Means consolidated financial statements are not in agreement with the books of accounts. Can I say that the consolidated financial statements are not in the agreement with the books of accounts? Yes or no? So 143.3D, where I will say that these financial statements are not as per the agreement in the books of account, are not as with the agreement with the books of account. Okay. Number 2, as an auditor, I need to specify that how I have dealt with respect to the audit report of this particular Pune branch, which is audited by some other chartered accountant, where this overvaluation of inventory by 2 crores is there. So my reporting requirement will also come as an auditor under 143.3C, that whether I have considered this observation and whether it was material or not for my opinion. So how I have dealt with it. If we go back and we talk about 143.3, talks about that sent to him under the provision of subsection and the manner in which he has dealt with it in the preparing of his report. So how I have dealt with this report when I was preparing my own report, that I need to talk about over here. Clear? Any doubt with respect to second number?
Yes, sir. Clear, sir.
Let's go to the third number. What is the third number? Where it will come? Again, take a minute, read the question, point number 3, and then tell me.
Sir, according to me, it look like control weakness. It will come under the internal audit of the internal control. The point number I, section 143. In
Yes.
that, it's a control activities. The segregation of duties and other things is not there. So we will report under that, sir.
Okay. Yes, absolutely correct. So this is the point where you are talking about segregation of duties. Now, segregation of duties is a part of the control activities, internal control framework, components of internal control. Yes or no? Segregation of duties. So over there, segregation of duty is one of the part of the control activities in the internal control component. Now, if that is present, then you cannot talk about that, the company is maintaining effective internal control, at least for the purchases. So this will directly have an impact on the section 143 3I reporting. Clear? Any doubt? Yes, no?
Yes,
So,
sir.
for your information, I will show you, we'll go back to the chapter number 4, quick revision of what we discussed in. See, in chapter number 4, if you go to the components of internal control.
Yes, sir. The SA 315, we studied this.
Okay. So these are the components of internal control that we discussed in chapter number 4, control environment, risk assessment, control activities. And if you go to control activities, over there, these are the type of control activities: performance review, information processing, physical control, and then you have a segregation of duties. See, now if the control is not appropriate at the segregation of duty, that means the control doesn't have a good control activity component. If the control activity component is not there, how can you say that control, if the component of internal control is not present, then how can you say that that particular internal control is proper and effective? It is not designed appropriately. It is an issue in it. Okay, so that's why 143.3 I will come into the picture. Last one, fourth one. Come on, quickly. Take a minute, read the question, fourth one, and then try to answer.
So fourth one again. Sir, fourth one again it will come under 143.3. That class J it will come, sir. We discussed that rule number 11. It talks about any litigation, pending litigation on this, whether the company has disclosed the impact. We will check. Based on that, we will report it.
Okay. Anyone else? Anyone else with some different answer? Okay, I'll tell you. See, there are two ways to report it. There are two places where you can report it. Number one, as per Companies Act, I'm not going to the compliance of the Ind AS. You can again, Ind AS and AS in this particular scenario is not complied also. So if you talk about AS 29 and Ind AS 37, it is not complied. So that is another story. But if you have to report as per section 143.3 or 1, you can report over here any qualifications, reservations, adverse remarks relating to the maintenance of accounts or other matters connected therewith. Either you can report here, one of the area. Secondly, you have to definitely report here whether the company has made provisions as required under the law or accounting standard. Now, accounting standard means here, if AS 29 is applicable, then that, or If Ind AS 37 is applicable, then that. So for the material foreseeable losses, if any, on the long-term contracts including derivative contracts. In this scenario, it was a 15 crore land dispute. Okay. It is a 15 crore land dispute. Now, here the company was required to make the provision. The company was, if I go back over there, okay. So here the company is facing, if there is an unfavorable outcome, which is probable, there could be a liability of 15 crore. One, you can report over there in that particular part that they are required to report and make the provision for this. There is a litigation for the land dispute. Okay. So there could be a liability of 15 crores. Number two, you can also report over here whether the company has disclosed impact of pending litigation on its financial position in its statement. So anywhere you can report, like wherever it is appropriate. I would say A is more appropriate than B, but there is nothing which can stop you. If you are seeing it is long-term contract, like information is not appropriate, land dispute is resulting from the long-term contracts or it's something else. But if it is long-term contract, you can go for B also. Otherwise, you can report in A also, where the impact of the pending litigation is disclosed in the financial position or not. Clear with it? Any doubt? So you can go for either Rule 11(1), A or B, whatever is appropriate in the scenario, or you can also report under 143(3) in the adverse one, like any adverse comment or remark. I think it's H. Yeah. Any doubt with respect to the reporting part or this question?
No, sir, clear, sir. But all these items we will report under separate heading, report on other legal and regulatory requirement.
See, yes, we will report over there also, but when you will form your opinion paragraph, now, at that point, these points, for example, non-compliance with accounting standard, okay, overvaluation of the inventory will also impact your opinion paragraph. Plus, it is 143(3) reporting. See, the question as of now only talked about the income company set. But in actual, when these kind of scenarios are there, I will also specify in my opinion and the basis of opinion paragraph, because it is not giving true and fair view. Because of these things, overvaluation, inventory is overvalued by 2 crores. Basis of qualification. Here, provision is not made. Basis of qualification. So opinion paragraph plus basis of opinion paragraph will get impacted in auditor's report appropriately as per SA 705. But apart from that, there is additional reporting under the company set that you need to look into.
Okay, sir. I need one clarity, sir. Whether we need to mention that the class A, B, C like that in exam while you're answering.
Yes, in exam, yes, definitely.
Okay, sir. We'll do that. I think it's required a lot of revision, I believe, but okay. We need more practice on this reports.
Yes, absolutely. Reason because here, like, that's why the purpose of discussing all these examples is that you should understand, okay, that where and what reporting will be done. That's why then you can understand, okay, apart from my opinion paragraph, is something similar is coming, then I need to report as per the company set. If it's a company also, I need to report somewhere else also.
Right, sir. Intention is very clear, sir.
Okay. Any doubts till now? Any doubts with respect to this one? This question? No? Okay. If no doubts, let me take up one more question. We'll take up one more question of similar nature that will really help us in understanding the concept of the reporting under Companies Act. Now, these questions are specifically targeted for the understanding the Companies Act reporting. Okay. So again, where here you are required to understand or report based on the Companies Act section 143, 1.3 or Rule 11. You are a CA Divya, the statutory auditor of Nexus Infra Limited for the financial year ended 31st March 2025. During your audit, you have noted the following matters requiring your attention. The company has entered into several long-term foreign exchange forward contracts to hedge its import liabilities. As of 31st March 2025, due to significant currency fluctuations, these derivative contracts were shown a material mark-to-market loss of 18 crores. The management has not made any provision for this loss, arguing that it is unrealized and the contracts will only mature in the next financial year. Wait a minute. Sorry. Let's do a read.
By 2017 to 18, the company had declared a dividend. You observed from the records that an amount of 3 crores rupees, which remained unpaid for more than 7 years, was due to be transferred to the Investor Education and Protection Fund, EPF, by November 2024. However, the company transferred the amount only in February 2025. The company is facing certain tax litigations where the demands have been raised by the department. The aggregate amount of disputed tax is 25 crores rupees. The company has not disclosed the details of these litigations or their potential financial impact in the financial statements. During your review of internal controls, you noted that journal entries initiated by the Chief Financial Officer, CFO, are not subject to review by any other authority within the company before being posted to the general ledger.
It was audible to you, yes?
Yes, sir. Very much, sir.
Sorry. So, the management contended that these are either procedural delays or issues related to future liabilities and do not impact the current financial results and then do not warrant any specific mention in your audit report. So, read the question again. I'll just play the question again for you guys. Listen it, read it, and then try to answer where you will report. I'll just select it quickly for the reading. Yeah.
You are CA Dia, the statutory auditor of Nexus Infra Limited for the financial year ended 31st March 2025. During your audit, you have noted the following matters requiring your attention. The company has entered into several long-term foreign exchange forward contracts to hedge its import liabilities. As of 31st March 2025, due to significant currency fluctuations, these derivative contracts were showing a material, mark-to-market, MTM, loss of 18 crores rupees. The management has not made any provision for this loss, arguing that it is unrealized and the contracts will only mature in the next financial year.
So now tell me for the first point where you will report.
Sir, on the first point, it is very clear that the 143.3J, that rule 11, it is talked about very clearly whether any company made any provisions under recorded in the law accounting standards or any foreseeable laws like that, including derivatives. In this case, that we have to report under that particular clause, sir.
Okay. Anyone else with some different answer? So yes, absolutely correct. We will report under as per rule 11. Okay, we will report this as per the rule 11. So rule 11, remember we discussed there is a point whether the company has made provisions for the material foreseeable losses, including long-term derivative contracts. Long-term contracts including derivative contracts. So this is the part where rule 11 will come into play. Rule 11b about the material foreseeable losses. So here, if you see, this is the loss of 18 crores and management has not made any provision for this. This is a long-term foreign exchange contract, forward contract. Okay. Due to significant currency fluctuations, there were material losses of 18 crores. So material foreseeable losses on these long-term contracts. They were supposed to be recognized, but management has not made any provision. So rule 11b, you have to report over there. Let's read the second point.
In FY 2000,
Sorry, too much speed. Yeah.
in FY 2017 to 18, the company had declared a dividend. You observed from the records that an amount of 3 crores rupees, which remained unpaid for more than 7 years, was due to be transferred to the Investor Education and Protection Fund, EPF, by November 2024. However, the company transferred the amount only in February 2025.
So tell me where you will report this.
Sir, in the Rule 11, it's talk about the dividend as per Section 123. But with respect to the education and protection, that investor education and protection fund, it's talk about in auditor responsibility. There is one paragraph there in the audit report. If it is not done, then we have to report under the auditor responsibility. We will check and report this point in there in that position, not in Rule 11, I believe.
Okay. Anyone else with something different over here? Some different answer? Anyone with a different answer? No? So either anyone says yes, it will not be reported under Rule 11, or you say it will be reported under Rule 11 or 143.3. So how many of say this does not require any reporting because this was transferred before March 25? How many of you say this does not require any reporting because it was transferred before March 25? Anyone? No?
It has to be reported, sir. See, the delay is there. By November 2024 itself, it should have been transferred. However, the delay is there.
And this delay is required to be reported in Rule 11 itself. So we will go to the Rule 11 again. Over there, whether there has been any delay in transferring amount required to be transferred to the Investor Education and Protection Fund by the company. If yes, then you are required to report that. And we will see one example also for this that was there in the report that we saw. If we go back to the top, we will see there has been no delay in the transferring amount required to the Investor Education and Protection Fund by the company, except for an amount of 2 crores, which was held in abeyance due to pending litigation cases. So if there is something, you have to report here in this particular para or in this particular point. So this will be reported. Okay. Let's read the point number 3 then.
The company is facing certain tax litigations where the demands have been raised by the department. The aggregate amount of disputed tax is 25 crores rupees. The company has not disclosed the details of these litigations or their potential financial impact in the financial statements.
So where you will report this one?
Sir, again, this you will report under the Rule 11, sir, that section 143.3J.
Yeah.
Under that, yeah, on the point A itself, we discussed in the earlier question as well, whether the company
Absolutely.
the impact on the pending litigation on the financial statement in its financial statement or not.
Yes, absolutely correct. Rule 11A, impact of pending litigations. Straightforward. And this one, I don't think so it requires any specific, but again, during a review of internal controls, you noted that the journal entries initiated by the Chief Financial Officer are not subject to review by any authority within the company before being posted to the journal ledger.
Sir, it will come part of the internal control part, then under the control activities, we will report under that section, not here in the Rule 11. It will goes to the internal control.
Absolutely correct. So it will be part of internal financial control over financial reporting. Okay, it's a management override of control. And this will not only create a management override of control, but this is also what? Management override of control is what?
It is fraud, tantamount to fraud.
Fraud risk.
Fraud
risk of fraud.
Yes, sir.
Risk of fraud as per?
SA 240.
Absolutely, SA 240. Clear with this question? Any doubt?
Sir, is this question are taken from the exam question?
This is for your practice, and these questions are developed for your practice.
Okay, sir. It's beautifully drafted, sir. Very nice.
Thank you. Any doubt with respect to any of the part that we have discussed? Any doubt? No? Okay. So today, just a quick summary. Today, what we did is we understood the structure of the audit report. Okay. How the audit report is there. What is the content of the audit report with respect to the, how it is drafted, what are the things which are there with respect to the audit report. And if I quickly take you to chapter 7. So we started with SA 700 and we discussed about these basic elements of audit report. Title, addressee, audit opinion, basis for opinion, going concern, key audit, other information, responsibility of financial statement with auditor's responsibility, then location and description of auditor's responsibility in FS, other reporting responsibilities, legal and regulatory part, signature of audit report, auditor, place and date, plus UDIN. So this is the thing that we understood as per SA 700 today. Okay. We went through and discussed section 143.3, 143.1 of the Companies Act. Okay, where we discussed about the duties of auditor. What is the duty of auditor with respect to the auditor's report? What he is required to report additionally. Okay. Now, what we will be doing in the coming session is that we will be talking more on the audit report with respect to from the point of view of Companies Act, CARO. I will take you to the CARO, and then once we are done with that, once we understood the CARO part, we will go for various different paragraphs. Like what if we have a modification over here in the basis of opinion? What if we have a key audit matter? What if we have a OM paragraph or EOM paragraph? What about other information? comparative financial information. So all these things we will understand in the coming session. Okay. I want you guys to read this chapter and practice as much as you can. Again, before we close this session, any doubts?
No, sir. It's very clearly explained in each concept of the reporting.
Okay. Okay. If no further doubts, then thank you guys. Thank you for participating in today's session. I will see you in the next session.
Thank you, sir. Good night, sir.
Thank you. Good night. Yes, sir. Thank you.